Okay, good afternoon, everybody. My name is Kiereini Kirika. Thank you for your time today, and it's a pleasure to be with each one of you and to meet you today. So I'll be making a presentation on making microinsurance work, and we'll be sharing the learnings we have across Africa over the last couple of years we've been in this market. So the first key thing I'd like to start with is in terms of just giving an overview of the insurance penetration in Africa. If you notice, the numbers are very low. On average, we have 3% insurance penetration across Africa, which is extremely low. And if you remove, for example, insurance which is compulsory, like a motor vehicle, that even goes down to 1%. So a growth of insurance has been a challenge across Africa over the years. And I'll explain to you why, and just give you examples of how what we've done to actually increase this insurance penetration. So I'd just like to ask a question. Do you think low-income people need insurance? Yeah, just a question I'd just like to pose to you. Okay. Basically, from observation, what we've seen is low-income people are actually the ones who face the most risk in the population, and actually they're the ones who actually need insurance most. But basically, they're not aware of this, and the first thing they do, for example, when they're faced with risk, for example, you'll find, for example, they'll move from they'll move from the city back to the village, okay, to lower their costs. They'll, for example, even remove children from school to save on the school fees, and they'll even change to even a lower paying job, or even sell households to basically meet the cost of maybe paying for medication or any maybe deaths which they may have incurred in their family. Okay, or even, for example, borrow to cater for those expenses. Okay, so basically, from my experience, we've seen the mass market, they rarely purchase insurance, yet they're the ones who are actually faced with the highest risks in the population, unlike the middle to high income population, who, for example, have some savings where they're able to cater for these risks whenever they're faced with them. Now, how do the low-income people look at insurance? So they basically look at insurance. They compare it, for example, to the cost of buying a soda, buying a Coca-Cola, for example. So they look at it in terms of the price of a Coca-Cola. That's basically how they would see they would equate that to the price of insurance. Okay, so for them, they want an insurance product which is like very, very affordable, very something which is within their reach and easily accessible. So you can imagine the cost of a soda is what they would want insurance to cost. So what we've done is we do a lot of research, get to understand their needs, get to understand what it means for them in terms of living hand to mouth. So, for example, I'd just like to reflect on this and give you an example. Like in Kenya, in Nairobi, Kenya, we have one of the biggest slums called Kibera. So in Kibera, we've actually gone on the ground and seen what it means, by living hand to mouth. So, for example, you find when someone maybe wants to brush their teeth in the morning, they would, for example, take their toothbrush, go to the kiosk with 5 shillings, and give the kiosk owner the 5 shillings, and then he would squeeze, toothpaste on their toothbrush. So that's what it really means, living hand to mouth. So these are things you need to understand, you need to appreciate, get to understand what it means for the low-income people in terms of living hand to mouth and how they're able to meet their costs and face the risks they face. Then from there, we can be able to design solutions, insurance solutions which meet their needs. Okay. Now, some of the obstacles which basically prevent insurance penetration. If you look at that chart there, you have we've compared the typical insurance proposition and microinsurance. So what we're saying there is the cost of delivering insurance is normally, out of the reach of the mass market, and it's normally very expensive. And this is because the traditional insurer, has a lot of, manual processes, and in terms of their overheads are extremely high. So what we've seen as Microensure, we've basically been able to automate and digitize a lot of these processes in terms of enrollment, in terms of claims, and just simplifying the entire, insurance journey, and also integrating with the various partners, for the front office partners like the banks and the MFIs like yourselves. And that actually simplifies the entire journey, reduces the costs, and basically makes the insurance product more affordable and easily accessible for the mass market. Yeah, so we can see from that chart the typical insurance model, in terms of the OPEX, that's actually normally the highest cost. Okay. Now coming to looking at mobilizing deposits with Microinsurance. Okay. So basically, if you look at the problem, one of the problems which is faced typically is that you find 80% of personal deposit accounts, which are, for example, below $25, they lose money due to overhead costs. Okay, that's in terms of the MIS, in terms of the staff, etc. And then you find tens and thousands of small depositors don't respond to like the typical interest incentives. And you find like 65% of the mass market customers tend to save money at home. Okay, and you find even when banks, for example, do some brief like promotions, like maybe win an iPad or win a smartphone, you find that these don't have a lot of traction and uptake from the consumers. Okay, and then you find like a lot of their liquidity is overly dependent on high value depositors. Okay. And again, banks need to maintain a good reputation in terms of being good corporate citizens, okay, and also minimize their expenditure, okay, on CSR activities. And then you find also, the typical bank assurance products don't actually address the actual need of the consumers, and basically this actually creates a gap, and you find like the traditional insurer would probably just focus on price and not actually do a deep dive analysis of the actual need of the consumer. Okay, and the other thing is, in terms of now the opportunity, now that brings us to the opportunity. You find again in Africa the insurance penetration being 3%. Now there's a huge, yet the mass market have a huge demand for protection from the risks they face. So that now gives us an opportunity to actually partner with the banks and the MFIs to actually drive insurance penetration in tandem, and by bundling it now with the savings products. So for example, from my experience, Microinsurance has proven to actually create value in terms of revenue growth, driving loyalty, driving savings for consumers across Africa, in various industries like the banking, MFI, and telco industries, in countries like, for example, Ghana, Tanzania, Malawi, and also Kenya, and also many other countries across Africa, just to name a few. And moving on, in terms of the goal, what are we trying to achieve? So, for example, by bundling Microinsurance with the deposits, we want to reduce the number of unprofitable deposit accounts. Okay, encourage depositors to save at a level which is accessible to them, but also meaningful for the bank at the same time. All right, and then we also want to increase the average deposit balance on the personal accounts. Okay, stabilize and enhance liquidity, lower the cost of capital, and also generate higher equity valuation. All right, and then we also want to mobilize tens and thousands of dormant accounts, because you find banks also have a lot of dormant accounts, and this is actually a cost to them if the accounts actually not active. Yeah, so we want to basically regenerate the bank accounts and ensure people actually actively savings in those accounts. And also what we've seen is, for example, the more you engage your customers, the more it actually creates an opportunity for cross-selling other products. So customer engagement is something we really encourage and something we do continuously. to understand their needs and to understand, what challenges they're facing and how those products they currently have are actually addressing their needs. Okay. Then in terms of mobilizing savings, I'll share a case study with one of our partners in Ghana. This is basically a product called Savings Linked Insurance. This is a product which actually drives savings and encourages customers to save. So this was with Women's World Bank in Ghana. So in terms of the cost, to the bank, in terms of the insurance premium, that was $25,000, and this basically returned a value to the bank of over $100,000, and basically with a very impressive ROI of 50%. So on the left, you will just see in terms of the marketing communication. It's very, very simple, and the go-to-market action is basically save 100 Ghana cedis or more and enjoy life insurance to cover for your children's education. So again, when you communicate with the mass market, you have to make the communication very simple, very straightforward, and easy for them to understand, where they can actually see basically the benefits of the insurance product on the fly. Okay, and then on the right, it just shows you in terms of more details of how that product actually performed. All right, and then just going deeper into the results, what you'll see in the first 6 months of launch, from June to November, this basically this table shows you the increase in deposit balances, which were below $25 from the 7 branches of that particular bank. Okay, so what I'd just like to highlight, there was a huge increase of basically 207% increase in savings, and something I'd like to highlight, which we are very proud of. During that particular period, the microinsurance product was the only intervention which the bank was actually running during that period. So it was very clear actually that particular product was actually what was actually driving the deposits in the bank. So these are very impressive results which we've seen from this particular case study. Then I'd just also like to give you some insight in terms of examples of how to structure the proposition. So we've used an example. We've used FCMB who are on the call, FCMB in Nigeria, and we've actually partnered with a sister company in Nigeria called Credit Direct Limited. And we are very familiar with their business. So this just gives an example of how you can actually structure the savings product to drive savings using insurance. So the call to action here is, for example, FCMB cares, save 10,000 naira or more and enjoy free insurance. And then there are different tiers. So for example, you'd start with if you save, for example, 10,000 naira and above, you'd get free life insurance. If you save over 100,000 naira, you'd then also be able to cover your next of kin. And then more interesting, if you save more than 250,000 naira, you'll then also be able to benefit from hospitalization cover, which is something which is very attractive for the mass market. They face a lot of hospitalization related risks, and so this is something which is from my experience is very attractive for them. And then for those in employment, for example, if you save more than 500,000 naira, you're able to get a job loss cover in the case of redundancy. Okay, so if you notice from that table, there are five different tiers. So the bank is able to basically do a targeted marketing. For example, you can actually target like the customers who are spending 10,000 naira and more, and tell them, for example, did you know, like if you spend 100,000 naira and more, you'll be able to benefit from additional insurance benefits. So this now helps you now grow your deposits over time. Okay. So in this particular case, the projection here would be, for example, expected deposit growth of 48%, which basically we've seen this is actually achievable from our experience. And in terms of the number of accounts growth, we were looking at a projection of 24%. And that now creates a profitability of over 1 billion naira for FCMB. Okay, so this is just an example of how we can be able to structure that particular product. Okay, now going to the more interesting part in terms of how do you actually deliver this microinsurance? What are the key determinants of driving microinsurance penetration? Okay, the first thing you need to get right is the model. You then need to get the product right and the packaging. And one most important thing is in terms of the delivery channel and also the operational delivery. So in the next few slides, I'll just deep dive further in terms of how we can be able to drive microinsurance penetration. So in terms of the business model, this is something which is very key. From experience, we've seen there, the three distinct roles that need to be performed in order to deliver insurance products to the mass market. So first of all, one of the key things you need, a front office partner like yourselves, the banks and MFIs, telco partners, mobile wallet partners, okay, who will be basically the front end customer facing partner. And then you then need, a back office partner like Microensure, whose work is mainly to design the insurance product, to do the pricing, the high volume policy and claims administration. Okay, all fully automated, end to end, from enrollment to claims, to be able to to manage a large customer base. For example, across Africa and Asia, we've currently insured over 60 million customers. Okay, and then you also need an insurance, a risk carrier. Basically, that's the insurance company or the reinsurance company, just to underwrite the risk. Okay. And then, of course, in terms of our expertise, okay, yeah, we are basically experts in various areas. For example, in terms of product innovation, in terms of market knowledge, it's very important to actually understand, the customer, understand basically what their needs are, so you can be able to design, products which actually meet their needs. Okay, and then another key thing I'd like to highlight is in terms of our robust operations, ensuring that we're able to process high volume claims and enroll a large number of customers, and more importantly, in terms of speed of claims. So something we've seen has actually hindered insurance penetration is lack of believability when it comes to claims payment. So you find the traditional insurer, the claims payment are very slow. So that actually now makes customers not to believe in the insurance product. So in terms of payment of claims, that speed is very important for us. On average, you'll find we'll pay claims, say, within 24 to 48 hours on receipt of full documentation. Okay, and this just gives our customers confidence of the insurance product once they roll into it. And then we're also able to create claims testimonials, just so that also to drive more believability in the mass market. And then in terms of the model, in terms of how we've seen this progressing most successfully, is, for example, I'd just like to give an example. In terms of the context here, people don't wake up wanting to buy insurance, but they wake up worried about the risks they face. Okay, so basically consumers are mostly unaware of the potential benefits of the insurance, and until the time where they've actually experienced the product and they've seen the benefits. Okay, and in terms of the front office partners, they're faced with challenges in terms of revenue growth, driving deposits and customer loyalty. So we've combined these factors to create basically a win-win approach. Okay, and this approach is basically based on a three-phased insurance program to maximize the customer preference and generate additional revenue. So what we propose, for example, from experience, is first of all to have a free insurance product for a couple of months, where customers can actually test the product and get a feel of the end-to-end enrollment process, end-to-end claims process, and just appreciate the value the product is giving them. And then from there would then now add other products. So for example, if you started maybe with a simple maybe life product, you would then now add a hospitalization benefit over and above that, or even maybe add family members to the cover. And then we can also now have other additional products. So, for example, in the case of business owners, we can add, say, like a property cover in terms of retail upsells. All right. And moving on, in terms of again addressing the specific risks, yeah. So it's very important to appropriately price the risks, and reduce the cost, through tech-based processes. So what we've noticed, for example, it's once you understand the risks these consumers face, you're able now to structure the product accordingly. For example, like the example I gave of actually living hand to mouth in Kibera, that's something very, 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 very key. And you find that these mass market customers, for example, are faced with hospitalization-related risks. They get sick, and for example, they have to do a fundraising to actually look for money to be able to cater for the medical bills before they go to hospital. That actually makes their illness even worsen. Okay, and I would also like to just give an example of one of the partners we have in Kenya and across East Africa, called One Acre Fund, where we're currently insuring in Kenya 1.2 million farmers for hospitalization and funeral-related risks. So you find One Acre Fund's aim is to ensure that the farmers are always on the farm, 99% of the time. So what was happening before they partnered with us, farmers would fall sick and spend maybe 3 days looking for funds to go to hospital, and then spend another 3 days in hospital. So basically a total downtime of 6 days, and that was actually affecting their productivity. So after they partnered with us, now once a farmer gets hospitalized, they're able to get 5,000 Kenya shillings, which is basically $50 upfront for every hospitalization, and so they don't have to do a fundraising. So they actually just spend 3 days in hospital, and then they're out. So we actually reduced the downtime by 50%, and this has been a very, very beneficial for the One Acre Fund farmers. Okay. And then when it comes to just enough and just in time, so again, for the mass market customers, they compare insurance with for example, airtime, how much they are going to spend on their airtime, money they're going to spend on buying, say, food for their family, and even maybe the cost of mobile money. So it's very important that we create a product which first of all generates value for money, where they're actually seeing the benefit. They're able to pay for it, afford it, and they're able to see the benefit once they claim. And then it's very important to also make the product very easy to understand. So we've simplified the policy documents. For example, it's available online. It can be uploaded on the bank's website. It can be available on a web browser, or even if it's printed, it's just an A5 flyer. Unlike the traditional insurance policy document, which is maybe 10 pages and font size 8. Okay, we even, for example, in the countries we operate, we translate the communication. For example, it can be in French, it can be in the local dialect, something the mass market consumer understands. Okay, and again, the product needs to be relevant to the need, ensure that it meets the needs of the consumer. And then another thing which is very, very important is instant gratification. So for example, what we've seen from experience is that with consumers, for example, initially you find banks were just doing life cover, but life cover was actually, they are not actually seeing, consumers are not seeing the benefit of this, because you find like in Africa, in the case of a death, people do a fundraising, and they're able to meet the cost of their family member who has passed away. So we found like with the health insurance is one of the products basically where customers are able to get instant gratification, where they're able to, for example, save, and in the case where they're hospitalized, they're able to get a cash benefit upfront for the hospitalization. So this is basically instant gratification, a product they can actually benefit and enjoy when they're still alive. Okay. Then in terms of radically simplifying the insurance products. Okay, so insurance needs to must be tailored, like, for example, like any other fast-moving consumer good offering. Okay, so in terms of now making the product innovative, where it can be explained in 2 minutes or less, and it should be bought and not sold, and then it needs to be basically exciting to the customer base, and also basically we need to provide fast and helpful customer service, and also in terms of flexibility of operations, ensuring that we're able to provide assistance very, very quickly and pay claims quickly. So what we've seen from experience in terms of how we've been able to overcome the obstacles of insurance penetration is, for example, by actually defying the traditional rules of insurance using now innovative microinsurance products. So, for example, one of the key things is, for example, not to have any exclusions, okay, and then not to have any waiting periods as well, okay. And what we've seen from waiting periods, for example, it's like you're giving somebody a product, but at the end of the day, it's like you're kind of telling him like, I really don't want to sell it to you. So it's a big hindrance there, okay. And then in terms of claims forms, we've noticed that it's best to automate the claims process, where, for example, in the case of hospitalization, in our case, all we require is a picture of the discharge voucher, okay. In the case of death, we just require a picture of the death certificate, which can be sent to us electronically, even using means like WhatsApp, or even uploaded straight onto our digital platform online. Okay, so now that makes this claims process very, very, very simple and straightforward. So no long complicated forms, no long complicated policy documents, and also no medical examinations beforehand, before enrolling, and also no identification required when enrolling. So basically, like, the identification is required at the point of claim, where we would require your ID just to confirm that you are the actual enrolled customer. Okay. So this again gives an example of how simple our policy documents is. So this is what the example I was talking about in terms of the simplified policy documents. This is just an A5 flyer, which just shows you the call to action. For example, this was with Airtel across Africa in 10 countries. So just dial *580#, and then you can be able to enroll to Airtel Insurance, which is basically life, accident, and hospital cash cover. Okay, and what we've noticed is another thing we do here is we leverage from the existing brand. So, for example, if it's Airtel, if it's like Women's World Bank, if it's FCMB or maybe Finca, we leverage from the existing brand. So that brand is what is actually seen by the customer in the forefront. And this is one of the key things we do to drive the insurance penetration, using the existing brand and leveraging from an existing brand. And then if you notice at the back of the flyer, just the T&Cs and the FAQs, very, very simple and straightforward, okay, and easy to understand. And this again can be translated into any local language. Okay, then now in terms of getting the distribution channel right. So one of the key things about the traditional insurance, you find they leverage a lot on career sales agents. So what we'll find is from this is that from the career sales agents, you find that the cost of setup is very high, because it's very expensive to actually pay these agents, and also in terms of the outreach, you find the outreach is very low because it's actually door-to-door selling. Okay, and then in terms of scalability, again that is very low. You're not able to scale very quickly. So what we've seen from experience, if you look at what we recommend is in terms of now partnerships with the MFIs and banks. So for example, where you find when you bundle the insurance product with the existing savings and deposit products, you're able to have very low entry costs, and the outreach is high. You're able to reach over tens and thousands of customers. Okay, and then in terms of scalability for the MFIs, that is medium. And then you find in terms of now, when you come to now mobile insurance, making it available, say, on your mobile banking platforms, again, the cost is very, very low, outreach is very high, and scalability is also very high, and you're able to reach a large number of customers. Okay, so distribution is very important to get the distribution right, so that you can be able to meet the customer needs and reach as many customers as possible. And also another key thing is that with the mobile insurance, customers are able to even enroll, with the insurance in the comfort of their living room at home. So that is also now a huge benefit, just like the way you can do a mobile money transaction without going to the bank. Then, in terms of robust, operations, this is something again which is very key. So, for example, I mentioned in terms of continuous, customer engagement, getting to understand, what the consumers need and what works for them. Okay, so that continuous field engagement is important, and also just to update the product in terms of the technology and offering. And then careful customer service. Customer service is very key, ensuring that you're able to meet the customer needs and be able to address their issues. Then most importantly is in terms of real-time and fast claims process payment. Okay, so ensuring that we're able to pay the claims quickly and we're able to pay majority of the claims. So in our case, we actually call the customers who have claimed and actually walk them through the process and just actually make it very easy for them to actually claim, and very simple for them to understand. Okay, and then in terms of risk management, it's very important to mitigate fraud and also and manage brand reputation. Yeah. So in our case, we also work closely with the service providers like the hospital to ensure that we're mitigating any fraud, and there are no fraudulent claims coming through our system. Then just to give you an overview in terms of a study that was done by ILO in terms of the impact of microinsurance, so across the globe. So I'll just give you in terms of some examples. So you'll find the study that was done in terms of lower out-of-pocket spending. So you find for example, with the introduction of microinsurance based on that study, there was a 44% decrease in out-of-pocket spend. So people are actually not going out of pocket to actually spend for their medical bills because they had insurance. Okay, and then I'd also like to highlight, for example, again, in terms of increase in utilization of health services. So again, this study was done in Nigeria. So you found, based on this study, there was an average increase of 15% in terms of the now utilization of the health services. Because what is happening here, people were actually not, immediately they fall sick, they would go to hospital because they know they have insurance, and staying at home and waiting to actually look for money. So this is actually a very, very interesting outcome and research done here. And in terms of people actually making better financial choices, okay, in the absence of a shock. So what is happening is we found from this is that people who actually like I would say hoarding a lot of money at home because maybe to safeguard any risk that they may face, like death-related risk, hospitalization-related risk, or even maybe fire or floods. So you find instead of, for example, spending that money, like for the farmers in Ghana, instead of spending the money on their farms, they're actually now holding the money at home. So you found from this, there was actually an increase in for example, expenditure by 24% in terms of now them buying fertilizers and spending the money on their farms. So this is just gives you an idea of how the insurance microinsurance has had an impact across the globe. Okay, and this was based on 38 studies which were done. All right, and then finally, just to conclude, I'd just like to just show you a quick snapshot of basically some of our partners across Africa. So, for example, in the banking industry, we have Barclays Bank, I&M Bank. There's also Access Bank. There's Letshego, and Vision Fund, Finca, Women's World Bank. There's also Musoni, and also Getbacks. And in the telcos, there's, for example, the likes of Airtel. And another area where we actually focusing on right now is in terms of the e-commerce partners like Hub, which is basically a taxi hailing company like Uber. Yeah, so that basically brings me to the end of my presentation. Thank you very much. And I think now we can move on to the FAQs. Thank you for that question. So one of the key things we've seen from experience in terms of creating awareness is, for example, of doing claims testimonials. This is something we've seen which actually creates believability a lot. So something we normally do is whenever we've had claims, we actually do a video of the claimant, who actually explains like what they were covered for and how they enrolled into the product, and basically what the risk they faced and how the claim was able to be paid. So that actually creates believability for the customer. Another thing which is very important is actually now to make sure that the communication is very, very simple and straightforward in terms of the terms and conditions, and in terms of the enrollment process and the claims process, making sure customers are able to enroll very seamlessly, very easily, and they're able to claim very easily without, for example, using long enrollment forms and without using long claims forms. Freemium upsell means that you're adding value. So, for example, I'll give 2 examples. So, for example, you could start with a life cover, and then which maybe just covers the primary member, who is just the depositor. And then in terms of now adding a freemium upsell, you can add the family members. Maybe you can add 2 or maybe 4 family members onto the product. Then another addition for freemium upsell, you can now add a product like hospitalization, which actually is very tangible, something which now they can again experience when they're still alive. So now it's basically adding family members or adding additional products. So the key thing is start with a low priced product, which is affordable just for market entry, and then now you can add on products as you move along. There are 2 ways we've handled this from my experience. What we do is, for example, when we partner with a bank or MFI, normally you find, like, for example, the cost of the insurance premium, for example, would be catered for by the increase in terms of the revenue they get from the increase, say, in the deposits or the savings. Okay, so initially this cost would be taken maybe from their marketing spend in terms of just the introductory offer, and then now this cost would actually be recovered from now the increase in deposits, increase in revenue they get from the deposits. Okay, the other option we normally do is, for example, we for example do a low end product where, for example, we actually cater for the cost of the claims for the introductory period, and then there's no cost to the bank or MFI in terms of premium during that introductory period. So that makes it very, very affordable and easily accessible to the partner and the customers as well. I'll give you an example, like where we've actually integrated into a bank's mobile money platform. And another example is, for example, where we've actually integrated into, let's say, like the Little Cab platform, the taxi hailing firm, which I mentioned, where, for example, they currently have about 25,000 drivers. So, for example, you find when the driver is actually hospitalized, we've integrated our product with their driver application. So the driver is able to just go onto the application. On the main menu, they're able to select Little Cab Insurance. That's the name we've actually called it, and then they're able to click on a button which takes them to submit claim. So under that menu, all they're required to do is, for example, they're told the documents they need to submit. For example, a copy of the ID. So once they click on and submit ID, they then now take a picture using their phone, and that is uploaded. And then the next document they need is a copy of the discharge voucher, which they then take a photo of and upload it on the app. Then finally, once they are done uploading all the documents, they then now click on submit. So that application is actually directly integrated using our APIs to the Microensure global product platform. And that claim is actually sent directly to our system once they click submit. So we receive an alert on our side. We action and verify the claim, and then within 24 to 48 hours, we are able now to pay the driver using mobile money. For example, here in Kenya, we use M-Pesa. So they're then able to get the payment, maybe if it's like $50, straight on their mobile money wallet. Okay, that's a very interesting question. I like that. So this is something we always asked in terms of crop and livestock. Yeah? And before we did our research and before we did our study of the market, we had always assumed like farmers, like their biggest risk is crop insurance. Yeah, but we actually realized that that's not the case. For a farmer, his biggest worry is, for example, like getting hospitalized or getting paying the expense of a funeral in the case of death of the farmer. So for them, the crop is actually the least of their worries. Okay, so you even find like in the case of One Acre Fund, I gave the example of the hospitalization case. Now, when it comes to funeral, you find like where One Acre Fund is based in Western Kenya, they actually celebrate a lot when it comes to death. So we actually even like nicknamed our funeral product to be called life celebration cover, because actually the costs are actually the cost of celebrating the life. Okay. Now, when it came to our experience with crop insurance, we did this, for example, in a couple of countries like Kenya, Malawi, Ghana, and also like in Tanzania. And one example was with World Vision in Kilimanjaro. So what happened is that we had actually insured farmers, rice farmers, about 10,000 plus farmers. And in this particular case, after the end of the season, so what was happening is we would insure the crop against drought or excess rainfall. So in this case, there was actually the area where the rice irrigation scheme was actually flooded. But the reason it flooded is not because of excess rainfall, but this is because it was actually in a valley surrounded by hills and mountains. So what happened is like when we checked the claims, when we checked the data from the meteorological department, there was no excess rainfall. So meaning that no farmer was actually eligible. But because it flooded, all the crops failed, and all the 10,000 farmers claimed. So from that particular experience, like the insurer actually refused to pay the claims. So as Microensure, we have to actually pay some of these claims ex gratia to save fees, because we had partnerships with Vision Fund across various countries in Africa. So that was not, a very good experience. So what happened is, what we saw from that is that the learning there was, first of all, the crop insurance is very expensive, almost like 3 times the cost of a life or hospitalization cover. And then in the event of claim, you find the entire population who is insured actually claims. So it's actually a loss-making product. So you find like majority of like the companies who do crop insurance right now, they actually use donor funding to actually mitigate that particular risk. Yeah, but the point I just wanted to highlight is that for a farmer, the biggest risk is actually hospitalization and actually life-related risk, not crop. Yeah. In terms of the cost, okay, in our case, I'll give 2 examples. One example is the traditional model. Let me start with that. If you remember the slide I showed, which had the graph, which is comparing the typical insurance model and the microinsurance model. So one of the key thing for the typical insurance model is the OPEX, the operational cost. They have a large overhead because they have a large large staff and workforce. So you find like an insurance company maybe has like 500 plus staff. In our case, we find like in every entity we operate, maybe have an average of maybe 20-25 staff per entity, which is very small. This is because we automate a lot of our processes. So you find in terms of our overhead, our biggest overhead is basically the innovation and the digitization and the automation of the enrollment and the claims process. Okay, and of course, when it comes to our case, you find in terms of the claims ratio, we find our claims ratio is on average maybe 60 to 70%, unlike the traditional insurer, which is maybe 10 to 20%. So we also pay a lot of the claims out, to create believability and for the customer to actually see the benefit of the product. Yeah. What we've seen is, for example, if you don't pay, if you pay very few claims, people start feeling like they're being conned. Yeah, and that's one of the reasons why insurance penetration is very low. In terms of the COVID situation, so one of the things is, remember I said one of the key things to drive insurance penetration is to have maybe no or very minimal exclusions. So in our case now with this pandemic, actually it's been actually a blessing in disguise for our business, because people have actually seen the need for insurance, especially health insurance, and more importantly, our health insurance product does not exclude pandemics. So we've actually been getting a lot of requests, from our existing partners and new partners to actually take up the health insurance product, and people have actually now seen the importance of insurance. Yeah, so it's something which is very encouraging for us. During this time, and that's also another way we can create awareness. There was that question earlier about creating awareness. We've been actually informing our existing customers that using digital communication, that our health insurance product covers them against pandemics, and that gives them a huge peace of mind. Yeah, so this actually, for those who don't have health insurance, it is actually the right time to take it up. Yeah.